Good morning. Thanks for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of what's happened. The US markets did well for 2 days on a trot, and you would see some bit of that slipping or coming onto the Asian screen as well. So it was good going almost both the days, so to say, for the US market. So that is actually a good sign. And I'll move on to the SGX Nifty very quickly and the trade setup because there's lots to discuss today, including the much awaited LIC issue, so to say. So this is what the SGX Nifty is indicating. For now, a flattish kind of a move. The question is whether we'll build on from here or will we stay quiet, considering that there is the crucial Fed meet outcome today, and ahead of that commentary, would participants want to stay light? I would reckon the answer is a yes, but let's wait and watch what happens out there. So a quick snapshot of what happened in trade in Monday's session, if we can just get you a sense of the top five gainers or the top few gainers and losers. So these were amongst the ones that gained. So likes of Tata Chemicals, results reaction, NLC India, the erstwhile Naval Lignite, Canfin Home, again results reaction. And what didn't do well, Solara, Dixon on that point about whether they get impacted because of Xiaomi, or Angel One and JM Financial, and we see what happened to almost all the brokerages after Zerodha's warnings. So all of that really impacting some of those names as well. But what's the trade setup for the day? I mean, frankly, in Monday's session, the Nifty consolidated in a very slender range, and now there is an upside resistance at the 200-day moving average, I reckon, of that zone of 17,200 to 250. I mean, different levels out there, but reckon around that zone is where you hit the 200-day moving average for the Nifty, and that could be a bit of a resistance zone. Banking outperformed, incidentally, on Monday, and it closed in the green. It sets the stage for more if the markets were to do well. So if the markets have to do well, as we said in Monday's session as well, banking and Reliance have to perform really in the absence of IT and almost no flavor there. You have to have banking and RIL to do well, and both of these remain the key for more upsides. Since banking did well, maybe it's kind of setting the bit of a base for more performance. To my mind, the only two pockets where, or maybe there are a lot of other smaller pockets too, in terms of mainstream conversations, power and defense continue to remain pockets to focus on at probably lower levels. A bunch of results to come out today, Tata Consumer and Kotak from the large cap end, and then of course the Nifty, and that is, and then we have Adani Total and Adani Green. IFL Wealth could be interesting, as could be ABB. Very interesting set of conversations lined up. From the spec chem space, Deepak Nitrite and Lakshmi Organics, and Aptech from the learning space remain in focus. What about stocks to watch? And just before we talk about the LIC IPO with Mayuresh Joshi, let me quickly enumerate the key stocks to focus on in the session today. Firstly, Tata Steel. Compared to estimates, that is, revenues were higher than estimated. Margins came in lower than estimated, but net profit 9835, doing much better than what the Bloomberg estimate were. Board has declared a dividend of 51 rupees per share, which is the highest since 2001, at least. And they've approved a stock split as well. So all of these could keep Tata Steel excited. Did I find too much in terms of fireworks in Tata Steel? Maybe not. But did they disappoint? Certainly not. So you got to take that on board. Maybe it does well. Let's wait and watch. Titan, revenue numbers in line. EBITDA numbers slightly lower than estimated, but net profit numbers slightly higher than estimated. A bit of a mixed bag. Margins certainly lower than what the estimates were. The question is, can it do better? Can it perform in a scenario like this? I think brokerages have a bit of a mixed view out there. Some have a buy, some have a neutral. So difficult to ascertain, really. Not necessarily the stock which will really move the needle too much today, but let's wait and watch. There could be surprises. Adani Wilmar, I'm bringing this only because it's such a popular stock from amongst the trading fraternity. Revenues were up 40%, margins at 2.8%, net profit down 26%. But then they've also acquired a large brand in Kohinoor. They've done some other acquisitions as well. Adani Wilmar has something or the other going for it at every single day. It's very difficult to call whether the stock will react positively or negatively, because it's just almost impossible to tell whether the stock will have an up day or a down day on any given day, whatever happens to the market. So I'm not going to venture and do that. What I can say, though, that is based on results, if anything from the Adani Group has to move, it's Adani Enterprises. Pretty strong showing out there, you would have to admit. Revenues up 32%, EBITDA margin higher than estimated, higher than the corresponding quarter. a profit versus a loss. So optically, they gave out a very strong quarter. The revenue size out there keeps on growing up. The airports business, coal mining, etc., multiple unlisted businesses continue to gain traction as well. One space you got to watch out. JSW Energy, by the way, not a bad quarter optically again. Revenues up 55%, big jump in margins, big jump in profitability for JSW. Maybe that does well. JBM Auto is the other one that you got to focus on, wherein revenues at about 1,072 crores. Operating profit margins were almost in line with the corresponding quarter last year, and PAT at 85 crores versus 32 crores. Now, keep in mind the reason why the profit after tax seems very inflated compared to the revenue growth. Revenue growth was strong. Margin performance is good considering that input cost pressures are there. Profit after tax looks much better than anticipated because of deferred tax credit in this quarter, which has inflated the PAT growth. Be that as it may, is it a good quarter? Yes, it is a good quarter. So you got to give credit that maybe the stock reacts. Ramakrishna Forgings, again, you never know, could react because revenues were up. EBITDA margins flattish, but net profit number in line with how the revenue growth was, actually better than what the revenue growth was at 83 crores versus 33 crores. So good going there. And maybe this one also reacts. Now, I haven't detailed out Hero MotoCorp or Britannia as much because I thought the numbers were exactly in line with what the estimates were. I read the brokerage reactions as well. I mean, fairly neutralish kind of a move there. So nothing too great in terms of numbers. Some stocks in news very quickly before I move on to Mayuresh Joshi, and would be lovely to have his views as well. ADANI Wilmar, as I said, has bought the Kohinoor rice brand to strengthen the food segment presence. SpiceJet, wherein DGC has grounded the Boeing 737-800 jets after severe turbulence incident, and they are inspecting the entire fleet. Could it have an impact on the stock? Maybe it could. And TV18, the PAT was down about 13.4%. A lot of expectations about they giving some additional information or the valuations of the Lupa investment, and nothing has come. So maybe that's a bit of a disappointment as well. Maybe the street will watch out for that. And some stocks to watch include an Apollo, Dr. Lal, Metropolis, with the Adani Group possibly making a foray into healthcare. I think there's a lot of rumor about how some of the stocks currently in the segment might get impacted. I haven't covered Godrej Properties results, but the brokerage views says it all. Very strong quarter. You never know, this one could actually have a very good day in the session in trade today. So do watch out for this one. Let me welcome in Mayuresh Joshi to talk about the big boy, which is LIC, and what is his thoughts on whether people should subscribe, not subscribe, why or why not. Mayuresh, thank you for being patient with us today. Very good morning to you. Before I ask you about LIC though, may I ask you, it's been 2 days of fairly large reportage of results as well as some stocks in news. Is there anything from the list that I spoke about or something else that stands out for you for the session today, which could have, I mean, forget which could have a reaction, but which is making notes, which is noteworthy? Mayuresh, you are on mute. You will have to unmute yourself. You had put yourself on mute. I couldn't hear you. Sorry.
Apologies. Morning, Neeraj. Thanks for having me on your show.
Thank you.
So out of the broad set of results that you mentioned, my own sense is that Godrej Properties, as you spoke about, I think very strong sets of numbers and the expectations in terms of earnings delivery continuing for this group and for this company in particular, I think can very well continue. Real estate demand looks strong, and therefore Godrej would probably stand out. The other two companies which also reported a better set of numbers, I think Tata Steel, though the EBITDA miss has happened, I think it is not because of the core business. I think it's more ops and trade related. And the reported EBITDA per ton on the Indian operations at 24,500 odd rupees per ton. Europe very strong at $240 per ton. Net debt is down at 51,000 odd crores. And a 10-to-1 stock split. So I think that should remain in focus as well. And last but not the least, out of the broader universe, I think RK Forgings has come out with an extremely strong set of numbers. I think quarter on quarter, year on year, you've seen significant improvement. Capacity utilization has gone up significantly. For the quarter and for the year, it's 77% from 62 odd percent. The realization per metric ton has gone higher and northwards of 180 odd thousand. And therefore, I think RK Forgings should also probably stand.
Sorry, Mayuresh. Yeah. Okay. So I don't know how that disturbance came about, but nevertheless, please tell.
Yeah, sorry. So I think Tata Steel, Godrej Properties, Archiforce should possibly hold out in today's trade.
Okay, Mayuresh, thank you for that. Sorry, that was out of syllabus. Not that you need one really, but let me ask you about LIC, the big IPO. Now, purely from a retail investor's perspective, Mayuresh, what is it that they should be watching out for when they are deciding whether they should apply or should not apply?
So two, three factors. I think first for the life insurance space as a whole, I think it's largely underpenetrated as we all know it. But a large element in terms of the protection gap, that is the resources you probably need at the time of an untimely death, and what we have right now is still relatively high at 83 odd percent compared to a lot of even the other APAC countries. So I think the kind of new business premium growth that one can really expect in the mid-teens. That can very well continue, which gives a solid base and foundation for insurance companies as a whole. The second aspect is in terms of their leadership position itself. So I think 64-65% in terms of market share, 61.5% in terms of new business premium. And though I think the valuations in terms of embedded value at 6 lakh crores at 1.1 times is relatively less compared to the listed players, I think there are some positives and negatives as well. So I think the headwinds that LIC is probably facing at this point of time is obviously declining market share, the individual insurance premium, which is a key segment for insurance players, that is on the lower side, and the short-term persistency ratios probably on the lower side as well. So I think that probably act as headwinds for LIC as a whole. But I think you probably got a lot of tailwinds as well. In terms of tailwinds, the company has realized that they are having a large proportion of group and participating business, which obviously has been a drag on value of new business margins. In terms of the annual premium equivalent, I think a significant portion, more than 65%, comes through in terms of group and insurance policies, which is a lower margin business compared to a lot of the listed players like HDFC, ICICI, where the participating business is less than 30%. So they are trying to course correct, is what the prospectus is probably showing. Upselling, upscaling, more digital offerings, more into protection plans, and more online offerings as well. So that should probably take care of a lot of concerns that the street has on this aspect of lower margins, which happen to be at 9.3% in terms of NBP,
Right.
compared to what HDFC and SBI has. So I think large player, underpenetrated space, attractive valuation, some headwinds, but I think a large portion of tailwinds supporting them as well. So long-term investors should apply for that.
I don't know this small issue of the sound, but that notwithstanding, Mayuresh, one last very quick question. So because a retail investor is not necessarily having to buy into LIC or has to buy an insurance company. So one, would you buy an insurance company per se? And two, within that, is LIC a better bet or are the private insurers a better bet?
So LIC becomes a long-term bet purely from a valuation perspective. But as a space, I think at our global level, we do like insurance players. So HDFC Life, SBI Life, even if the valuations are higher, our own sense is that the new business premium will keep on increasing at a good pace,
Got it.
and they will have competitive offerings as well.
Okay, Mayuresh, we've taken too much of your time. Thank you so much for joining in today and giving us your thoughts. Much appreciated.
Thank you so much.
All right. Viewers, that's the view from Mayuresh Joshi on LIC. So he's saying that William O'Neill, of course, likes the insurance space globally, and Mayuresh Joshi would not hesitate to recommend a buy from a long-term perspective on LIC. The others also look solid. So you remember, you don't have to be in insurance necessarily just because an LIC IPO is coming, but your valuations for LIC seem to be attractive. It's the big one for the next 2-3 days, and us and everybody else will be on top of it, I'm sure. So we'll keep on getting updates as well. But for today, purely from a trade perspective, remember, ahead of the FOMC outcome, people may want to stay light. So you keep that at the back of your mind if you're trading. Watch out for Godrej Properties. Watch out for the Bharat Forges and the others, because the classic truck sales weren't the best. But Ramkrishna Forgings had some good numbers. So keep that and JBM Auto from the auto pack in mind. Tata Steel, numbers not too bad. Stock split, a large dividend. Maybe that keeps the stock excited. The other large caps like HDFC, Britannia, etc., pretty much in line. So no great shakes. And as we said, Godrej Properties probably one standout performer in the session. So there's something, rather one standout result in this, in a lot of them that came out. I mean, that's something that people may want to watch out for. Thanks so much for tuning in today to the Trade Setup. Have a safe day ahead.